Hey, what's up, everybody? Hopping on here just to go over the system that I had talked about and what I'll be utilizing to update our kids' portfolio, just to show you um, how this works and how this is going to grow your kids' financial um, future in a way. Um, Again, we've used this system to build up our own finances, and it's kind of been a safety net in a way when I wasn't working for a little bit. Um, it came in clutch to provide income to cover our bills, and it was a huge blessing. So we have adopted this system for ourselves, and basically, I'm going to go over how it works and then how you can implement it for your kids' portfolio, like what we're doing right now to give them a financial future, sort of a launch pad, if you will, once they turn 18. So let's hop into um, the system right here. Let me see if you can see this real quick. Zoom this out for a second. So basically, how this works is your income. I'm going to go over each and every one of these blocks um, in depth here in a second, but let me just run through the flow of this. So your income comes in, right? Your income is going to feed into your large portfolio, and your portfolio is going to contain assets, ETFs, and stocks that produce dividends, right? And so these dividends will come out of your large portfolio. These are paid either by week or monthly, and then these dividends get allocated or deployed to cover different things like your bills. For us, this might be taboo, and I think Sean over at Paycheck Two Portfolio is kind of he's either not taking this approach or he's on the fence about it. But we use a credit card to basically cover all of our purchases, to include some of our bills and subscriptions, um, food, entertainment. Mind you, we strive really, really hard. At least I try to. I'm the finance guy of our family, to try and stay on a budget. So we're not going cuckoo on here and just accumulating a ton of debt. This can be dangerous. You can go overboard with this, and this is how people get in trouble. Is just mismanaged credit card usage. But we utilize a credit card for most of our purchases simply because we get cash rewards back, and we stay within a budget. So these cash rewards are somewhat consistent. It can be anywhere from $50 to $100 every couple of months, but that's nice because that just goes right back into our large portfolio to buy more um, assets that produce more dividends, which means more income. So these your dividends will get allocated to just different things for your circumstances. For us, it's paying down our credit card and also feeding our kids' portfolio. Which then I made this just a transparent one because at some point, our kids' portfolio will become another engine, if you will, that will feed back, that will produce dividends and feed back into the large portfolio. And then once again, giving us more dividends to just kind of build this whole entire cycle um, and grow your assets and your equity over time. So let's get into kind of just the simplicity of this and how each one of these works. So your income, right, is going to be anything from your W-2 9 to 5 job, your 1099 gig work like DoorDash, or um, anything you're going to end up paying taxes on. That's that you're working as an independent contractor. Any gifts that you receive, um, just from people being generous. Hopefully, you have people like that in your life. Um, my parents were huge on this. My wife's parents were huge on this. By the way, it's so funny. I just have to mention something along that line. Um, I care very much about um, keeping good relationships with everybody. And we're told to honor our parents, right? Honor our mother and father. And I love God in that I love God so much that I care about having a relationship with my parents and my wife's parents. Um, and that's paid off for us in some ways because they've been there to support us. I know there are people close to me who don't honor that, and the relationship they have is with their parents is rocky, and that's unfortunate because there's good fruit to come out of honoring your parents and trying to maintain a good relationship. I understand that's not everybody's situation. I'm not saying like that's not me looking down on someone. I'm just telling you it's designed that way. God has designed relationships in a way to where your parents can be there to help you if you need. So sorry, there's just a little caveat, but it goes to show when you do things God's way, there's fruit to be had. Okay, so and then miscellaneous, it will be something like let's say you want to flip some furniture from Facebook Market or something, or sell something that you have that you just don't use anymore. That'll be income as well. Um, your greatest source for building wealth is going to be your income, right? So have at it, make as much as you can. Hopefully, you're not, you know, um, losing your soul over doing something like that. You know, um, I know I was in a position like that, and it was a miserable time in my life, um, where all I cared about was just working my butt off so I can make a bunch of money. And I get it; that's a lot of people's situation right now. But hopefully, you're making some kind of income to support yourself and your family. And once again, that's going to be your greatest source for building wealth. Um, this is your income is going to be the fuel for the three engines that drive this whole entire system, and I'll go into that here in just a second. Be creative and be ethical about it. Don't try and scam anybody or scam the system by any means. As you can see right now, there is just a huge, um, I feel, um, I think we're waking up as a country to the fraud and scam that's robbing so many people right now. And that's unfortunate. That's really sad because that affects everybody in some way, shape, or form. But be creative with making income, start a YouTube channel, create a Facebook page, get put your hands to something that's going to provide value and you get, rewarded for it. And that'll be another source of income. So just be creative, okay, but do it ethically, that you're not breaking any rules or laws, okay? Um, and just a side note here and a reminder, America is the best place for opportunity right now to make money. I have a strong conviction that we I think our country is on the verge of a major shift in that we're pulling out of a lot of things that are causing us um, to not be as valuable as we can be or once were. And I think we're trying to switch that back to where we are a production and manufacturing powerhouse, and especially with technology, energy, just some things off in the future. I feel like we're going to be a very if we can do what we're doing right now and execute on it, I feel like we're going to be a very, very prosperous country, not built off of debt, but because of the value that we're actually producing. We're going to be very prosperous for the next 20, 30 years. That's my conviction, and that's just kind of what I'm seeing on the surface. Um, so let's move on to our portfolio. I'll go into this um, somewhat in depth, but I'll go into it more in other videos, I'm sure. But your portfolio, this is our large portfolio, how we have it set up. It's going to be a mix of ETFs and even some stocks that provide dividends, right? That's going to be your another source of income for you is going to be your dividends that you receive. For us, it's a three engine structure that drives the whole entire system, and that's your high yield ETFs. For right now, we're running it a little bit aggressive right now because I'd say we're about 97% debt free. The only debt that we consistently have but gets paid down is our credit card usage. Um, but we're about 97% debt free, which is an amazing feeling. And that frees us up a lot financially to do other things. So our portfolio consists of high yield ETFs, growth ETFs. That is that they grow in value as they give you a dividend, and then a balanced hedged ETF um, portion. And that's basically when the market dips, these actually rise in value, and you can sell those off to just kind of mitigate some of that dipping. So, three engine structure that drives the whole entire system. Each category can be weighed for your circumstances. So, hey, if you're sitting happy and you know your bills are essentially taken care of, and um, you don't have a lot to worry about. You have a solid, steady 9 to 5. You can mix this up to where, say, 80% is growth, 10% is hedged, and 10% high yield. You can play with this however you need to for your particular circumstance. Something I'll mention that's really important is it's on you to do the due diligence on what you buy, right? Nobody's really gonna, well, people will um, hold your hand, but it's on you. You're the one clicking the mouse. You're the one, making those purchases of ETFs and stocks. So it's on you to do your due diligence and see what works, what doesn't, what's how much risk are you willing to tolerate, right? Um, and how do you see what you purchase? Um, how do you see that playing into your future for your financial situation? Okay, so that's on you. It's you got to do your due diligence. All right. Another thing for our portfolio is red. We think of red as bad, as like an alert. But the last 6 months, I've kind of shifted my mind and thinking red means sale. That's when things are on the cheaper end that I can buy, and then they're gonna, if the fund is managed well, they're gonna rise back up, and they'll be worth more. So red doesn't necessarily mean bad for me. The market's always going to like go up. At least that's how it's designed with corrections, right? The market will go down when it needs to correct, but the market essentially will continue to rise and go up. So when I see red, I think um, discount. It's a sale. It's time to purchase, right? Moving on to dividends. Um, Dividends are going to get allocated for us in three ways. It'll pay down our credit card usage. It'll go back. Some of it will go, not all of it, some of it will go back into our large portfolio. Once again, when I see red, I'm going to see what's kind of on sale and what's the trajectory at the moment and try to buy at the lowest point because I'll know it's going to go back up. So I'll use some of those dividends to buy back into um, some of these on sale ETFs or stocks. Not all the time. That doesn't happen all the time. Um, my primary use of dividends at the moment is just to pay down our credit card usage. And then we'll allocate some of those dividends to go back into the kids' portfolio to keep growing that one. Um, Dividends used as cash flow to accomplish objectives, i.e., like I just said, pay down debt, grow the kids' portfolio, grow our own portfolio to get distributed back into our portfolio so we can increase that income. Um, and it's going to increase over time because once again, the market will grow, the value of your ETFs will grow. There's good fund managers who try to keep the net asset value stable and even growing. Once again, you'll have to do your due diligence, but if you follow the Facebook page, I'll give updates on what's good to have, what's good to maybe be cautious on. Um, because I want everybody to win here. I want everybody to to know like this could be a great means for giving an inheritance to your kids and your kids' kids. So that's my heart and behind this, because it's worked for us, so far. I think it's a great system, fairly redundant, and it yields um, it yields good things. So, and then once again, allocate according to your circumstances. Not every month is going to be the same. When you get paid, the market could be at a correction, which means it's dipping down. That could be a good time to buy. Or you could, when you get paid, the market could be at another all-time high. What do you do then? Um, Maybe hang tight. Whatever the case may be. For us, I'm trying to make our money work for us. I don't want my money just sitting there like it would in a normal checking savings account where it's not doing anything but just sitting there. I want our finances, or excuse me, our income to be working and making money for us like a business, right? So let's move on. Credit card. Okay. I'll go into this very simply how we're doing this. Um, our credit card is a means by is a means to just gain a little more income every couple of months, right? Um, Margin, your portfolio, once you, at least for E-Trade, once you um, deposit over $2,500, you can use margin. And margin is like a loan that you can use to leverage to, say, buy more assets that will produce more dividends. But you have to be careful with that because there can be what's called a margin call, and that's when you're using an excessive amount of margin that is more than your total equity. And they can do what's called a margin call. And essentially, that's like the brokerage saying, hey, we want to make sure we're going to get our money back and you're not, just blowing it all. So we're going to sell off some of your assets, and that way we get our money back and you still can use margin. And I want to avoid that at all costs. It hasn't happened to us yet. I've just seen that as a risk. So if you stay within a certain percentage of margin usage, you should be okay. But if you go crazy with it, then you risk um, the unfortunate event of getting a margin call and some of your assets get sold off, so they can make sure they're getting their money back. So that's part of the reason why we use a credit card, is to mitigate some of that, um, and we get a cash reward back. So credit card can be used to replace margin usage. It helps avoid margin calls. The interest rate for my credit card that we use is less than E-Trade's margin usage. That's simply because I've had this credit card for ever since I joined the Navy, and that was some time ago. And I've talked them down um, over the years for interest rate usage, um, for interest rate and our credit card usage. Um, so I'm sure there's credit cards out there where interest rate, the interest rate isn't so bad. Um, I would just say with the whole credit card aspect, just be careful and do your best to live within your means and within a budget. That's what really helps us utilize this kind of avenue to play into the system. So again, offers extra income. This is what feeds our large portfolio, um, because of the cash rewards, right? That goes back into it. And then once again, just live within your means if you're going to use this. And that's that. That's pretty much how the system runs. Another thing I know this video is going pretty long, but another thing I want to say is you don't have to go all in on this system. You can, I think Sean mentions this quite a bit. If you want to play it safe and you're just not willing to risk, that's fine. Um, you can scale into this. You can just allocate a portion of your income to start this and to grow until your dividends come out to where it maybe covers one of your bills, like a subscription you have, or an extra $50 a month for gas. I mean, gas is crazy right now, but again, this is just a system that allows for us to play the game in a way and grow um, our finances in a positive manner. So You don't have to jump all into this. You can scale into this bit by bit. But this is what we're running right now, so we can kind of give our kids a launch pad for their future and with their finances. Okay. And then lastly, I'll just kind of show you um, what this looks like in real time. Let me jump over here. So this is our kids' portfolio right now. You can see that they each have, mind you, we started this with $200. They each have over $1,000 in their accounts right now, which is so awesome to see. This is kind of how we have it set up. I'm playing it a little, just slightly aggressive, but once we we're going back into doing our little business we had back in Colorado. I'll switch this around to where it's a little more on the conservative side, and it's mainly going to be just um, growth ETFs that also give us a dividend back. And once again, it'll just keep feeding itself, right? So this is kind of a mix of companies and um, dividend producing ETFs. Okay, so they broke $1,000 I think last month. We started out with $200, and whatever we made from our small business, we just put into their portfolios, and it's kind of feeding itself right now. So this is really cool, and I'll keep you guys updated on this either weekly or bi-weekly. I'll show you what I buy, and yeah, maybe you can do this for yourself or start one for your kids. Okay, so that's that. I know it's a long video, but this is basically how I'm gonna run our kids' portfolios and how we run ours, and I'll give you updates. And yeah, let me know what you think in the comments. Like this, share this if you want. If you have any questions, um, shoot me a message or drop it in the comments, and we can talk about it. Okay. Till the next one. God bless y'all, and bye bye.